In today's video, I'm going to teach you how I got a $28,000 payout as a full-time 6-year funded trader. I'm going to break down my full methodology that will turn you from a beginner to a professional trader after this video. My name is Jay and I'm a full-time online entrepreneur and funded trader from South Africa that documents my journey on my YouTube channel on various ways on how I trade, my strategy, my methodology, and my risk management strategy, and also touching on emotional management. Without further ado, let's hop onto my PC and hop straight into the value that I've prepared for you guys today. In today's video, I'm going to teach you the methodology that I used to get funded and remain funded and generate consistent payouts for myself so that you can learn exactly how to do the same. In this example of EURUSD, I'm going to do a top-down analysis, show you the methodology so that you can learn how to apply it to your charts and catch your own profitable trades, while at the same time managing risk and passing your prop firm account, and ultimately becoming funded and generating your own payouts. I really recommend that you pay attention to what I'm about to teach you. This is going to be a really value-packed video, packed with a lot of hidden gems that I recommend you make notes, save this video to your watch later, and I at least recommend watch this video twice over and over again so that you can slowly but surely understand these concepts. This is not going to be some simple system with a MACD crossover, an RSI, or Lux algo buy and sell signals. This is my custom structure and order flow methodology that I've discovered in 6 years of studying the charts, how price moves, where money lies in the market, to identify where large institutions and financial banks are buying and selling in the market so that I can ultimately trade alongside their footsteps and remain on the right side of the market. First and foremost, I start off on the daily time frame. Let's use this visual example of this being the current daily structure. Alright, price has most recently created this daily break of structure to the upside. We can label that as our daily boss. The lowest point of the structural leg that has created the break of structure is your strong protected low. So your expectational order flow is to respect these strong lows and continue targeting these weak exposed highs. Okay, so this most recently would be our daily break of structure, our daily strong. After every single break of structure that price makes, price will incur some kind of pullback point. After price incurs that pullback, this will be labeled as your daily weak high. So the expectational order flow for price will be to pull back, mitigate areas of supply or demand in the previous structural swing range between the previous weak high and that strong low, to conventionally continue targeting those weak highs. I'm going to go over a couple of live examples, apply this in live action, and also recap the trade that I took on EURUSD this week on live stream. Top-down analysis, markup, and trade plan discussed with my community members, which I'm also going to discuss with you so that ultimately you can become independent at mastering your structure and order flow to ultimately become your own profitable trader. Alright, in the meantime, we'll label this as a demand zone. I know at the moment this is just a visual mind graph, but I want you to really just grasp a visual idea of how this methodology works. Now, my structural mechanical rules. From the daily, we hop onto the 4-hour. Within the higher time frame daily leg, we will have lower time frame 4-hour structure occurring with higher highs and lower lows. Price mitigating demand, creating those higher highs and lower lows, with the expectational order flow to continue targeting those daily weak highs. Okay, so within your daily structure, you will have internal lower time frame 4-hour structure with 4-hour breaks of structures to the upside, 4-hour strong protected lows, and weak exposed highs. Strong protected low, price pulling back, mitigating areas of demand to continue targeting those weak highs. As the 4-hour starts to shift internally bearish, we can start to expect a bit of a daily pullback into daily areas of demand, and in the interim, create lower lows, breaks of structures to the downside, and strong protected highs instead of strong protected lows. As price is starting to pull back into areas of demand, what can we expect is for price to start creating higher highs, taking out those strong protected highs, and creating new strong protected lows, and to follow through with that order flow until we target that daily weak high. Now, within the 4-hour structure, we have even tinier structure that occurs on the M15 time frame. So from the 4 hour, we hop onto the M15 and we have smaller M15 higher highs and lower lows starting to occur. Price respecting those lower time frame M15 supply and demand zones to ultimately cater for the overall higher time frame intentions. Okay, so we'll just mark that out until there. But what I'm trying to get down to is the ideology of my 3 structure type system is daily structure, 4 hour structure, and M15 structure. The M15 complements the 4 hour, which complements the daily. And once you can understand these 3 time frame structure types together, you ultimately have a much clearer context of what price is doing, of where you lie in the market, and ultimately form your trade plans from there and execute your trades based on being on the right side of the market and having a crystal clear contextual understanding of where you lie in price. Okay, so I'm going to remove this and let's do 1 or 2 live examples. So what I'm going to do is I'm going to come over to Euro USD on the daily time frame and let me mark this out for you. So most recently on the daily time frame, we have created a daily break of structure to the upside with our daily strong protected lows. Price created that break of structure, that internal shift to the downside, internal pullback into supply to continue with a bit of bearish order flow on the 4 hour, pulling back into the previous structural range to mitigate area of demand, to then shift bullish, 4 hour internal pullback, to then continue with that bullish order flow to target those weak highs. After we created that new 4 hour break of structure to the upside, this becomes our new strong protected low because this is the lowest point after the pullback after the previous break of structure that created the new break of structure. Strong protected low, weak exposed high. So the expectational order flow was to now start a bit of a 4 hour pullback, understanding we can start to expect shorts from here, to mitigate area of demand, to then start shifting bullish to continue targeting those weak highs. But instead of price doing that, we had that break of structure to the downside. So now the expectational order flow shifts. All that changes is we can now expect a bit of that daily pullback into supply to continue target these daily weak lows. Okay, so to even get a better and a more contextual understanding of why the daily is doing what it's doing, you can hop over to the weekly. And we can see on the weekly, most recently we've had a weekly break of structure to the downside. We mitigated monthly demand, which then catered for that weekly pullback. We've then mitigated weekly areas of supply, especially over here. The weekly then shifted bearish, understanding that the overall weekly expectational order flow is to now continue targeting these weak lows. So the reason why the daily has now shifted bearish is because the overall weekly pullback is now due to finish after mitigating areas of supply in the previous structural range to then continue targeting these weak lows. So now that we have an understanding of the overall weekly price action and the daily price action, we can now go from the weekly to the daily, which we've just covered, and from the daily to the 4 hour. So you'll see at the moment on the 4 hour, which I've labeled out for you guys, we created after that daily break of structure, which was over here, a 4 hour break of structure, 4 hour pullback, 4 hour break of structure, 4 hour pullback into supply, 4 hour break of structure, price still continuing bearish. What can we expect in order for that daily pullback to start is that 4 hour break of structure to the upside. So in order to identify price when it's in that daily pullback phase, we need to look for that 4 hour break of structure to the upside, because remember, our 4 hour structure is our daily internal structure. Price then broke structure to the upside with a candle body closure on the 4 hour time frame. Now making this a strong protected low on the 4 hour time frame, but at the same time it's also our daily weak low. Understanding that this 4 hour break of structure is just catering for an overall daily pullback. We then mitigated older areas of 4 hour supply, which then catered for the 4 hour pullback into areas of 4 hour demand. So what is the expectational order flow? As price is sitting over here, we can start to expect internally to shift bullish to continue targeting these 4-hour weak highs, which is exactly what we did. We had that 4-hour break of structure, that 4-hour pullback into demand, that 4-hour break of structure, that 4-hour pullback into demand, 4-hour break of structure, pullback into demand, 4-hour break of structure, and the overall swing break of structure, which we can then expect that 4-hour pullback to then start into these areas of demand. Okay, so now that we have an understanding of the 4-hour, we're currently in that 4-hour pullback phase. We have very heavy bearish momentum, especially mitigating the daily supply. We failed more recent areas of demand. After that failure, we had that pullback into flip supply. We had that pullback into opposite side supply to continue short to target these weak lows. I will cover supply and demand zones in a later stage, but in the meantime, I want you to grasp the understanding of my 3 structure type methodology. Okay, so as price currently lies, we're busy lying in a very valuable 4-hour demand that has created the 4-hour break of structure. We have that inefficient push with all of the liquidity lying above this zone. So that's one thing I want you to make note of. In order for a supply or demand zone to be valid, that supply or demand zone needs to create a fair value gap. In this case, we have a displacement and fair value gap over here. It must have liquidity resting above or below that supply or demand zone. It needs to be unmitigated, meaning price must not have pulled back into that zone and tapped into it. And finally, that zone must create a break of structure or a change of character in order to be valid. And that's the difference between a supply and demand zone and a high probability institutional level. All right, so understanding why the 4-hour is currently bearish is because price is currently catering for that 4-hour pullback. But also understanding price has just mitigated daily supply. If the daily pullback is now going to end, we can expect the 4-hour swing to start shifting bearish to cater for a bit of a 4-hour pullback to eventually target these daily weak lows, as the longer term expectational order flow is to target these daily weak lows. So we need to keep that in mind because price can do one of 2 things from where it is at the moment. It can continue to respect areas of demand, to continue targeting these weak highs, catering for more of a daily pullback, or from here we can shift bearish on the 4-hour time frame, take out the strong protected low, pull back into supply, to then continue targeting these daily weak lows. Okay, so that's where it's so important to have that higher time frame understanding of what the higher time frame intentions are before trading the lower time frame. So from the 4-hour, we can now hop over to the M15. All right, so I want to recap a 1-27 risk to reward trade that I live streamed with my community with a full top-down analysis and higher time frame understanding of the market to understanding where the expectational order flow needs to go. So at this point in time, price was busy sitting right on this candle over here at 8 o'clock in the morning as London session started. Understanding that price still needs to cater for more of a daily pullback to mitigate daily areas of supply before we can target these daily weak lows. On the 4-hour time frame, we've had that 4-hour break of structure to the upside, that 4-hour pullback, and we've now shifted bullish on the 4-hour with this 4-hour internal break of structure to the upside. We've had that 4-hour pullback and that M15 break of structure to the upside, putting M15 demand in supply. Where is the expectational order flow to go? Is to target these weak highs and also mitigate areas of daily supply to firstly cater for that pullback to start the overall bearish momentum on the daily time frame to target these expectational weak lows. All right, so immediately from the 4-hour to the M15, after understanding that, I hopped over to the M15. We've most recently had an M15 break of structure to the upside, M15 pullback, M15 break of structure to the upside, M15 pullback, M15 break of structure to the upside, M15 pullback. We didn't mitigate demand. Instead, we just created liquidity above this demand zone, which was a valid wick zone. And my confluence and my mechanical rule for a 15-minute supply or demand zone, and I want you to make note of this. This is you could say a secret sauce that makes a supply or demand zone super, super valuable. And that is if we come over to the 1-minute time frame, to look for our confirmation entries, because the 1 minute and the 5 minutes is only for entry confirms. We only look at structure on the daily, 4 hour, M15, and we only look at supply and demand on the daily, 4 hour, and M15. All of our entry confirmations in that higher time frame POI occurs on the 1 minute. And my entry confirmations is based on a bit of ICT concepts. Okay, my secret sauce for a supply or demand zone is this indicator that I've got over here, that it's highlighted, this blue box, is the Asian session liquidity. So this high and this low is your Asian range high and your Asian range low. A supply or demand zone that has the Asian liquidity resting below or above this zone is extremely high probability, especially when you've got the higher time frame idea of your structure that needs to target these weak highs. So on session this morning, it was about 7 o'clock in the morning when I was preparing for the stream. I marked out this Asian session liquidity, which I'm going to mark out as a sweep. So my trade plan for this morning was to sweep Asia, look for mitigation on this demand, to then take confirmation, to continue price to target these M15 week highs. Okay, and this is how this trade played out. So remember, yes, we're on the 1 minute, but we have that total understanding all the way from the daily to the 1 minute. So price played out. I was not interested in anything that was happening over here. We were just creating more liquidity after Asian session for this area of demand. This is where I started the stream at about 8 o'clock in the morning. We then swept Asian liquidity. Now, the first thing that I was looking for was a displacement fair value gap entry. So as this played out, we had this big push up and displacement upwards, and we created this fair value gap. Candle 1, 2, and 3. This candle's high did not overlap with the third candle's low, this being a valid fair value gap to take entry on. And this is my entry confirmation, called a displacement fair value gap, after a liquidity sweep into the higher time frame POI. So I put my limit order on that fair value gap, stop below the low, targeting that M15 week high. And this is how that trade played out. So we tapped in immediately. I set break even at this fractal high. So price now is due for a bit of a pullback to continue targeting those weak highs. Okay, there's that pullback. New weak high targeted pullback to target that weak high. Okay, weak high targeted, due for a bit of a pullback to continue targeting those weak highs. So we can expect price to mitigate demand. Okay, break of structures, pullback into deeper areas of demand. So even structure and order flow applies on the lower time frame. Mitigation of demand, internal break of structure to the upside, internal pullback into demand to continue long from there. Okay, internal break of structure, pullback into demand. Further pullback into deeper areas of demand, sweeping this liquidity to eventually target that M15 week high. This trade could have also catered to target the overall higher time frame daily supply, which would have catered for a 63 risk to reward. So what I'm trying to get down to is, once you start to understand your higher time frame intentions of price, order flow, and market structure, it will allow you to catch massive risk to reward trades like this. Now, if you guys want to go and get access to my morning live streams every single morning, where I go through the charts with my members, mark up the full structural breakdown of my methodology that I teach to my students. I have mentored about 1,000 students privately, and I've created over 150 funded members this year. I will leave a link down below to my community. I want you to use this free video that I've posted today to start practicing structure, to get introduced to it, and to really shift your trading career in the right direction. Every single morning, I'm hopping onto live stream with my members, going over markup, trade plan, analysis, and execution. If you guys want to join those streams and start to learn structure and order flow, and ultimately keep your side on the right side of price, and where some of the largest money orders, being billions and millions of dollars pumped into the market every single day, is being put into the market via supply and demand areas, liquidity structural highs and lows, weak structural highs and lows, and for price to target that. My community will work very closely with you in helping you master the structural methodology to ultimately become your own profitable and funded trader, even if you're trading a personal account, to become profitable on your own private capital. I will leave a link down below to that community. There's a page that breaks down everything that's inside, also with a 10-minute video on top where I discuss everything inside of the mentorship. Every single stream is recorded and posted as a webinar video, so even if you do miss the streams, you can watch the private recordings inside of that mentorship. Without further ado, guys, I really want you to pay attention to future videos that I'm going to be posting on my channel, because it will help you really elevate your trading career. Take care, guys, and I'll see you in tomorrow's video.